Hello, fellow traders. Tis I, the Rumpled One, coming to you on Tuesday, July the 21st. The year's 2020. Let's talk trading. Trading step by step. The final step. I know everybody out there that's been watching this series is really wondering. It's like, okay, we gotta get to the point where we're actually clicking the mouse. Well, I just want you to know that these videos are for educational purposes only, and your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, what's the final step? The final step is clicking the mouse. But when you click the mouse, you realize something, that it's like you're crossing over into a whole different realm. And I've alluded to this before. You're crossing a threshold when you click the mouse. You are now in a trade, you're in the market. Your money is at risk, your portfolio is at risk. And the thing is, there's nothing you can do. And that's the final step, is that you have to really internalize it, that once you put that trade on, there's nothing you can do to make it a winner. The market may present you with an opportunity to take profit, or it may not. The market might take a little and if of your money from you, and if you allow it, it might take a lot. So the one thing you want to do is you want to guard against having the market take a lot of your money. And you all know what that means, right? That means your risk management. I know you're thinking, you've already told us that. Tell me something new. Well, part of the final step is realizing there's nothing new to tell. You have to get over that. And you see, what you have to understand is that once you're in the market, everybody talks about trade management. Well, we pretty much have the downside taken care of. It's called a stop loss. But the thing is you've got all these other things happening when you're in a trade. You might not take the money off the table because, you don't want any regret of missing out, or you think, well, I'm gonna miss out, or I'm gonna lose out if I don't take this money off the table. And then if you do take the money off, then you get all these regrets. Fear is what happens beforehand, and the regrets what happens after. You've got to stop that. You just have to be that trained monkey I talked about. Monkey doesn't care. Monkey's just going to do what it's trained to do and get the banana. The monkey's not going to experience any of the pain or the anguish or the mental stress, because the monkey's just going to do what it does. It doesn't, that's all it knows to do. So it's not going to experience that. And so any of that pain, that's your reaction to the market. And I know I've said it once and I'm going to keep saying it. It has to sink in, because the final step is realizing that it's really understanding and internalizing the fact that once you put the trade on, either you're going to get lucky and have an opportunity to take profit, or you're just unlucky and you're going to get stopped out, or you're going to cut your losses. And the thing is, you're going to have to also realize that the market has a strange way of showing you some money and then taking it back. Sometimes it takes it back a lot quicker than it shows it to you. You could be up 4 or 5 pips, and then in the blink of an eye, it'll drop, 6. And you go from +5 to -1, just like that. It's like, what happened? And so that's why you have to have some strategies, taking 50% off the table, moving the stop, or moving it up to break the stop up to break even +1. And you have to also internalize that every win is luck, because you don't control the outcome. If you could control the outcome, there would be no market. It's speculation. But most people, when they trade, they don't understand it. And you see, another part of the final step is realizing the system really doesn't matter, because it doesn't, because there's how many systems are out there? Hundreds, thousands, I don't know. Does every trader have his own separate different system? You could say that. How many traders are there? A million? I don't know. It doesn't matter. It really doesn't. All that matters is for each and every trader, once they put the trade on, the system that got them into the trade no longer matters. All that matters is whether or not the market gives you an opportunity to take profit. That's it. See, that's trading. And nobody else out there really talks about it that way. They want you to believe that if this moving average crosses over that moving average, or if statistics or CCI or MFI, any of those other lower level indicators, sub window indicators with the squiggly lines, tell you to do this or do that, but it doesn't matter. None of that matters. So when I say at the end, it's not what you trade, it's how you trade it. The how you trade it is the risk management and the money management. You have to understand that. It's not the system. That's not really the system. Trading at horizontal lines, yeah, that can be profitable, but you have to manage the risk and you have to manage the money. Okay? And that's why I say, a lot of people say, don't look at the P&L. Well, that's all that matters is the P&L. Why wouldn't you look at that? That you can pretty much quit looking at the charts once you're in the trade. All you have to do is look at the P&L. And either it's going to go up or go in your direction, your P&L is going to be green and positive, or it's going to be red negative. That's it. You can't do anything. The charts, I don't care what the chart tells you. Oh, the chart, according to the chart, is blah, blah, blah. Well, that's all it is blah, blah, blah. What matters is what's happening to your P&L. Is it increasing or is it decreasing? That's what trading's all about. And why all those traders out there, all those educators, all those books, all those courses, they don't talk about that. They'd much rather say, oh, see the arrow. You could make, 500 pips if you take this buy this $37 indicator EA. To me, I have to laugh. Maybe you don't, but I have to laugh because it's ludicrous. And that was one of the reasons why I started writing code and just giving it away, because I really wanted to put all those guys out of business because, they're just trying to fool people, in my opinion. I mean, some people can take some of the methods that I show here and they can make money. Other people can take the same method and they lose. And that's why, as a trader, you have to have the money management and the risk management in place. Because if you don't, chances are you're going to lose. And I've shown you with the TRO Einstein, it just, whenever you bring up the indicator, it puts a horizontal line and two trigger lines. You can trade off that, because once you put the trade on, it really doesn't matter. Now, of course, in some areas of the chart, you have statistics on your side, but that's history. It's not probability. Don't get the two confused. Probability deals with future outcomes. Statistic deals with past results. Big difference. So, when you look at these methods and systems, you could pick any one, but it's going to be up to you to manage the money and manage the risk. So, for the week, we've got one pair that hasn't filled the gap so far. And you can see here, taking the breakout of the previous week's high, you could be up 69 pips right now. Taking the breakout here of yesterday's high, you could be up 70 pips right now. You see we've got 3 green days in a row. For the week, we're up 186 pips above the open. For the day, 73. Okay, we broke out of that weekly inside bar. That happened last week. Once again, that weekly highs. Right now, it's good for 79 pips. And the last inside bar on the daily was 38 days ago. And I don't know why MetaTrader does that to me. You can see we've got a bunch of pairs over 100. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 pairs over 100 daily range, high minus the low, daily high minus the daily low at the time. We're 17 pips off of the current daily high, and we're 85 pips above the low. So 102 pip range. Right here, we missed another pivot. I think that's 2 missed pivots this week. Price is probably going to have to revisit those levels. But you can see here, we had the pivot was way outside, so there was a short trigger here. You got stopped out. Another short. Looks like you may have gotten stopped out again. It happens. No method is perfect. And red rats look like there's feasting. Here's a red rat reversal here. Green candle closes. Red candle closes. Take the break right there. That would have been at 40. And you'd be up about 5 or 6 pips right now. You can see price had left the rat zone, but it's turned around and starting to inch its way back up. And we definitely have the range is large enough at 102. We almost hit the weekly R2. We hit the monthly R1. For the pivot traders. And we have hit our weekly pivot for this week, but a couple weeks ago we missed it. On the daily, we've missed a pivot here. At 26.14. We almost took out a pivot from 28 days ago at 27.54. The wick zone, there really wasn't much of a wick zone. It just shot right through it. Never even looked at the lower wick zone. Just crisscrossed it a couple times. And you can see here on just a blank chart, except with the previous candles, wick zones shown there. You can look at H1. You can look at H4. You can see here we broke out of that high, good for 20 pips. And this H4 candle is quite the character, as you can see. It's been all over the place. Price action at the line here. Green candle, red. You can see here this was red at the line, moved all the way down, turned around, turned green at the line. Profit both ways. Right now, looks like 40 would be a trade green at the line. So, fellow traders, the final step is clicking that mouse, realizing that really there's nothing on the chart that can help you from here on out. It's how you manage the money and manage the risk. That's the final step. You can use any method you like. One of mine, none of mine. You can flip a coin. It doesn't matter. Because once you put that trade on, it's up to the market. All you have to do is control the money, manage the risk. So, fellow traders, it's not what you trade, it's how you trade it. So go out there and drain the banks.